I seen the light excite all the freaks. Stack mad chips, spread love with my peeps.
Hey, welcome back everyone. It is time for another red hot cover call video. Wait, look, today we're going to talk about how we're stacking mad chips, and that's what I absolutely love to call it when I write an in the money covered call and we're using about 5 to 7 days for our expiration. We're keeping that window very tight because what we want is time decay to work in our favor. And we're using stocks for which generate high premiums, and if we pick that right strike price, well, we won't keep our shares and we'll be able to collect all of that time value premium. Now I'm going to show you the calculator I use for all of my in the money covered calls, and I use this every single week, generating $3,000 a week using 3 trades using these stocks. Now let's go ahead and get to this. If you like anything you hear today, I want you to subscribe to the channel. I come back every week, show you timely and relevant covered call trades, cash secure put trades, and poor man covered call trades, for which I absolutely have trackers and spreadsheets that you can download for free on my website. So if you want to generate cash flow, whether it's to pay the bills, live the good life, or plan for your retirement, well, hey, look, I want you to subscribe to the channel. If you like this video today, bang that like button. It lets me know you like what I'm doing. Now what I'm doing is this. I'm showing you all my closed trades. My total income tracker, for which you see right here. Every trade that gets open goes in, and every trade that gets closed gets posted, and we drop it down into the closed trade area where we can then keep track of the money we're making. So for 2024, right now we're 2 months and 10 days in, and yeah, I've made $93,687 writing covered calls, selling cash secure puts, maybe collecting a dividend, maybe selling a stock, all inside of my selling premium portfolio. That's how it works. I don't cherry pick here, and maybe I bought Nvidia at 200 and sold it for 800 and I lump it in. That's not how it works. If I buy a stock and I use it for cover call writing and I sell that stock for a profit, well, of course, we're going to add that to the totals. So the total income tracker is something you absolutely want to download so you can keep all the numbers in front of you. And that's what I do. So let's go ahead and talk about that in the money covered call. We're going to use the weekly covered call. So let's go ahead and sort my spreadsheet based on days the trade was on. Now for this video, I'm going to pick up to 10 days. If you've been with me, you know I usually like to find my favorite covered call stock that I'm going to write an in the money call on. I like to do it on a Thursday or Friday leading into the next Friday's expiration date. Why? Because we're able to collect a lot of premium on this side of the weekend versus on Monday looking for a Friday expiration. We can pick up good money if we decide to do this on a late Thursday, early Friday, and then we have almost 6 or more full days. So for me, a weekly covered call typically is 10 days max. Now for this video, I'll show you up to 7 days. And I may have many more here, but we're going to go ahead. We'll pick 8 days, okay? So 8 days. These are all the stocks for which they expired 8 days in. Now, with that said, some of them may have expired early. I bought them back and then wrote a covered call. I'm going to pick from this list a couple of them and explain the thought process, when I did it and why I did it. And we'll talk about the premiums as well. We do not roll these things. We just go ahead, get rid of the stock, we do it again. So taking a look at TNA, what we're going to talk about is the stock TNA, and you can see we opened these trades on March 6th and March 4th. They are in the money strikes because, as you can see, I'm going to give my shares away cheaper than what I paid. And what I paid is in this window. So what we're going to do is we're going to buy the stock. In this example, it's going to be $40.93, and we're going to give somebody the right, but not the obligation, to take them away from us at $39. Now, the premium they pay us is going to cover that difference. This is where it can be confusing for some. I'm buying them at $40.93. I'm giving them away at $39. That means I'm losing $1.93 on this trade. Well, in the options world, they call that intrinsic value because I am selling the 39 strike, and it's going to be a 1 week covered call. So that expiration is 1 week. The strike price is $39. The stock's currently trading at $40.93. Somebody has to pay me the difference. That $1.93, that ain't free. So somebody's got to pay me. So when I dial up the option premium for that, you could see I got paid $2.52. Every option has two components to it. You have real money, or what they call intrinsic value, and you have time value. This is called the premium profit. So when I offer up my shares, for which I bought at $40.93, that $1.93 goes into the real money side of the option, and then the time value portion makes up the rest. So remember, I got paid $2.52, and $1.93 was intrinsic value. So let's bring up the calculator for this trade, and I'll show you how that profit works. Now, before I get there, here's what the members got. I do have a membership. They see all my trades. I probably do about 30 trades a month, so those could be thought about as 30 trade alerts. That's right, I send all of my members all of my trades in and out. We explain why we do it. They get to see the world through my eyes, a peek over a successful active trader. Well, here's that trade, and you could see when we put this on, it was March 4th. It was going to end March 8th, so this is a 4-day trade. We're using TNA, which is a 3x leverage ETF to the Russell 2000. Like I said earlier in the video, we're using 3x leverage ETFs so we can collect that higher time value premium, and we're able to write these short window covered calls where it's very likely they take our shares. And that's what we did here, and I explained to the members exactly why we do this. You could see the total projected cash flow for this trade about $1,180 or 1.4%. on money invested. That 1.4% is very important because every single time I do one of these trades, I always try to make 1.2 to 1.7. I even tell the members that every single time we want to make at least 1.2 to 1.7% in this nice tight 1 week covered call. Because if I'm doing that 4 or 5 times a month, we are beating the stock market hands down. Absolutely knocking it down. So let's go ahead and take a look at this trade as to how it's set up. And what we're going to do here is we're going to go to the chart. So I want you to stick around here. We're going through the numbers here, and I'll try to get through this a bit quick so you understand it. But we also can move to the chart because I want to show you that. So a quick recap. We're using TNA. We're using it because it has higher premiums. It's a 3x leveraged ETF that follows the Russell 2000 small cap bull index. We're going to go ahead and buy 2,000 shares, and I paid $40.93. That turns out to be $81,860 invested. We're going to give somebody the right to take them away from us at $39. This is less than what I paid. We're going to make up for that, so stick with me. We're going to get paid $2.52. Now, on money invested, you're thinking to yourself, wow, I make $2.52, and this is awesome. But we don't. Because that $1.93 of intrinsic value, nobody makes any money. So it's the 59 cents that I make all my money. Now we're going to talk about it on the charts as to what happens if the stock were to fall, because I start losing money at $38.99. But this is our setup. We have it on for 4 days. Meaning for the next 4 days, somebody can take my shares. Somebody will take my shares if the stock finishes above 39. This gives us downside protection. As the stock moves sideways to higher to lower, that $1.93 gives us that downside protection where the stock could actually fall and I still make all this money. Let's go to the charts and I'll show you exactly what we're talking about. Now remember, this calculator and my membership is at the website cptdashboard.com. Go there, get your free spreadsheets, get your free calculators. I don't charge you for nothing. But if you wanted to be a part of my membership, it's there, and I have a 1 free month offer. I've had that membership since 2019, and it is absolutely blowing up because everybody loves the idea of writing in the money covered calls and using the poor man's covered call. And when I'm buying all these dividend stocks with all these premiums, they want to hear about it. They want to see when I do this. Well, you have to be a member, and that's when you see all of my trades, and you get to see my kids' trades. I will put on small ball trades where we're only doing 100 shares or 200 or 300 shares, and they're making anywhere from 400 to 1,200 a month. That's right. You can do this with just 100 shares of stock. If you have a little bit more, but you would love to show your kids, this is a great opportunity to join my membership. I give you the 1 free month, and you get to see the kind of trades I put on for my kids. Hey, it's one thing for me to get up here and just trumpet what I'm doing. And yeah, sometimes I could sling it here and there, and sometimes I get off the rails. But when it comes to my kids, we cannot lose money. So look, I want you to be a part of that. You will see all of those trades. CPTdashboard.com, click Upgraded Dashboard, get your 1 free month offer. So the video's getting long. Let's go ahead and finish this up. Now remember, when I got involved, it was March 4th. So on March 4th, the stock had actually rallied a little bit. So leading up to March 4th, it had actually rallied and then it started to peel off. So this is where I'm thinking the overall stock market is moving higher. We might get this move higher. I go ahead and do the in-the-money covered call, make the 1.44% in 4 days, and I have my shares taken away at 39. No muss, no fuss. Well, here's what happens. And this is where that downside protection comes in. We write that covered call on the 4th. The stock does, in fact, fall. My take was, if it did fall, it would fall to about 39x. Because my thought is, it's trading in this great range, and anywhere around 39, it was going to pull up if it's going to pull up with the greater stock market. And 39 was going to be around that number. Now, I could do the 38.50 and collect about 1.2%, but I like that 39 number, largely because of where the stock's trading and the overall market is being pulled higher. So with that said, that's what I did. I picked that 39 strike, and you can see it starts to fall. That downside protection is helping us, right? Because they paid us the $1.93. And now it is absolutely helping, because as the stock falls, it's eroding this number, which was the protection. I don't have to worry until after 39. Well, the next thing that happens, it bounces just above 39 and moves higher. And you could see as we get to expiration, it's now trading over 40, and we're going to have our shares taken away at 39. So I collect all of that 59-cent premium. Remember, I was paid $2.52. $1.93 was total downside protection or intrinsic value, or nobody makes money on that. It's that 59 cents I made money on. And when you do 2,000 shares, I was able to pocket some $1,180 on this trade. And that's what I'm looking to do for these tight window trades. I want that downside protection. Now, I know a lot of people say, look, you give up some of your premium when you do the in-the-money strikes versus the at-the-money strikes. Because, look, had I done the at-the-money strike, I probably would have gotten around $1 full for that. And instead of making a mere 59 cents, I'm making $1 per share. Well, I like the downside protection because look what happened. It actually fell. And there is a chance over the next 3 days that it falls back to under 39. So here is where it gets good. Had the stock finished below 39 and I had to keep my shares, well, now in this uptrend, I'm hoping the stock turns around and starts to head higher. Well, at that price, I still own the shares. Remember, they didn't ask to take my shares at $38.99, so I'm going to keep the shares. And that's what I'm going to do. I'm going to then write a 39 strike covered call. Why would I pick the 39 strike? I bought the shares at $40.93. Remember, the $1.93 of downside protection they paid me is in my wallet. That actually turns out to be downside protection. So my new cost basis is what? It's 39. So that allows me on that Friday to write a covered call with the 39 strike. This is why I love this, because it's like playing chess. I could actually do 2 trades in one. What I do is the first covered call, if I don't have my shares taken away, and it trades right around that 39 mark, because even in a bad trade, I'm thinking it gets to 38.50. That's all right. I still own the shares. We're going to go ahead and write a 39 strike covered call for another week. This time, we're probably going to collect maybe $1.50, and that has been the case many times. Meaning, I would pick up over $3 a share in just 2 weeks, and the stock basically has never moved. See, that's the power of cover call writing. The stock could actually go nowhere, and we are making money. That's why I love printing money, writing covered calls. Hey, look, go to cptdashboard.com, click free spreadsheets, get your in the money covered call calc. I absolutely love using it. In fact, I use it all the time. I did say I was going to show you another trade, but time has run out. But never fear. If you subscribe to the channel, you're going to see all of these trades as they happen, because I absolutely love writing the In the Money covered call, coming back and telling you about it. Now what we need to do, and this is where you step your game up from being an average trader to a great trader, we take all of these profits and we put them into buying great dividend paying stocks so we can grow our dividend tree. That's right. I take a majority of all of this money I make writing covered calls on all the stocks I own, and I buy monthly dividend paying stocks, where I take a semi-passive investment strategy and we turn that into a passive investment strategy where I get paid doing nothing. That's what you learn here on my channel. I want you to subscribe and bang that like button if you like what you heard today. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.